take us into the room, take us into what you think Jay Powell is thinking right now. What are your expectations for his testimony on Capitol Hill today? Do you believe he'll deviate at all from what he said during the last FOMC meeting or what we've been hearing recently? We just mentioned what we're hearing from Fed officials.
I think he'll stick very much to what he's heard from his colleagues, what the market has heard from his colleagues. I think he's going to reinforce the no rush to cut message, which was being delivered by many for a variety of good reasons. I think he likes the way market is probably set up right now, expecting cuts, if any, later in the year, and probably fewer than had been planned or expected in the market earlier this year. I think he's going to comment on the data, but in a way that says basically things are developing as expected. The economy might be slowing a little bit, but consumers continue to be healthy, and inflation is coming down. I always expected that to be uneven, so he'll nod to the January CPI. I don't think he wants to get too much out ahead of that sort of data, because there's data coming up later this week and next week, unemployment report and the CPI next week. So I think he wants to stay close to the past data. Those are, I think, the two major messages.
So he's going to stay close to the past data, but I'm sure, when he's on Capitol Hill, he's going to get a lot of questions about the data coming up. How does he respond to questions about the path of inflation? Because I think a lot of people just in the secular world feel like inflation is definitely coming down, but we keep getting this pushback from Fed officials.
I think he's going to say that the Fed inflation actually is coming down, but importantly, the path of inflation coming down is uneven. There's still some risks of an upside surprise. I think he'll observe the January data, the CPI, maybe came in a little hotter than many had expected. So I don't think he wants to feed into the notion that it's going to be just one way, because he doesn't know what the February data are going to bring, and it could be a surprise either way. But I think he wants to stick to the overall theme that the inflation number is looking healthier, which is why they have the possibility of setting up for cuts a little later. And finally, I think he's going to want to reinforce the possibility, the hope of a soft landing, but I don't think he's want to jump to a commitment that we're going to get there. I think he's still going to talk about, some risks on both sides there.
Really, I think a lot of people feel like we're already in a Goldilocks situation, but we'll have to wait and see what he says. So we just had a regional bank CEO on just a short time ago. He said he's listening very closely. One thing I know that he's listening for, I would imagine the street and maybe Congress people are looking for, more clarity on the balance sheet runoff when it comes to the Fed. What are you expecting when it comes to that?
I think he's going to say that that is working smoothly, and it's not quite an automatic pilot, but it's not the main tool that they're using. So don't look to see dramatic shifts there. He will also say, if need be, if liquidity conditions call for, they can slow it down a little bit. So I think he's going to be what I describe as sort of soothing around the balance sheet. He does not want the balance sheet discussion to be a source of instability in markets. And I think he believes that the best way to keep it from being instability causing is just to be very, very clear that it's going to continue on exactly the same path it's followed in the past, unless something unexpected happens.
Overall, the economy seems pretty strong. We did have that weak durable goods number yesterday. Also, the market is moving higher, hitting new highs in a variety of different sectors. We're seeing that broadening. Does that matter to Jay Powell? Does that something that he takes into consideration when he's not only talking to Congress, but when we're going to eventually get this rate decision?
Look, I think the underlying strength of the economy absolutely does matter. He will also be wise to not put too much weight on any one reading, because some have been a little softer, as you point out. Some have been a little firmer. Vis-a-vis the equity markets, it doesn't matter directly. I don't think he's trying to move the equity market one way or the other. It matters indirectly for this concept of financial conditions, and that will be the financial conditions continue to be consistent with a pretty good outlook for the economy. So I think that's one of the things that factors into why is there no rush to cut, because financial conditions are supportive of ongoing growth, and one of those is obviously how equity markets are moving. The other is interest rates are set by the market, and I would say the 10-year and the 30-year both are moving in ways that probably suggest a pretty good outlook for everybody.